Hi everyone, Juan here, and in this short video, we're going to discuss about unrealized and realized gains. Okay, so first let's define realized gains. Income from assets yet to be sold for cash, also known as paper gains, and may change according to market conditions. So these gains here are actually gains that are still considered paper gains and may change, okay, subject to market conditions. Now, here for example, this is my portfolio for dollar, and you have here 25 assets, okay? So I have here uh, buying positions, so meaning I have long positions for these assets, okay? And then if you're going to look at here, I have here green figures. I also have red. Now, these figures are what we call unrealized, okay? Unrealized gains, and these are unrealized losses, okay, meaning they change intraday because their selling price and their buying price are subject to market conditions. Okay, so these are still outstanding assets in my portfolio, and as of this observed period, let's say January 20, these are the unrealized gains and losses of those assets. Okay, so how about realized gains? Now, realized gains are income from assets that are already sold. Okay, and then here it's more on historical. So you see these returns or figures in your statement of account, and often subject to capital gains tax. So here you're looking at my trade history. Okay, so trade history, and this is for 3 months. That's actually covering October to January. Okay, 2021 to 2022 January. Now these are the assets traded, and if you're going to look at here, you have here the opening of the buy position. These are the prices. You have the closing prices, the date when they are opened, and the closing date. So at this portion here, you have profit or loss percentage, and the green figures here indicate that these positions, okay, were actually closed at a profit. So you have here the summary: total of 69 trades for the past 3 months and 100% profitability, meaning all of those trades, 69 of these assets here, okay, were closed at a profit, and the total return overall compared to the size of the portfolio is around 8.05% of my total capital invested. Now these gains here are now what we call realized gains because they are now added to my capital. I have locked in the gains to be now part of my capital. That's why they are called realized gains, okay, with the D, realized gains. Now here, how to evaluate your periodic performance. So first, you have that rule of thumb that gains are always higher than your losses. Whether that's unrealized or realized gains, it should be higher than your losses. Second, net performance is unrealized gains plus your realized gains. Okay, so here, for example, you have 10% in your unrealized gains. Okay, UG stands for unrealized gains. But you already have closed some of the positions, okay, realized gains with 10%. Okay, so therefore your performance for that specific period is 10% unrealized gains, meaning gains that are still subject for market condition, mark to market gains, and the 10% of your realized or historical trades profit. So that's 20%. Now, here you have 20% in unrealized gains, but you have losses, realized losses equivalent to 5%. So therefore, your net performance for that specific period, okay, 20 minus 5%, that's going to be 15% net gains. Okay, now how about this one? You have unrealized losses of negative 5%, and you have incurred negative 5% for your previous trades. So if you're going to measure the performance of your portfolio, that's going to be negative 5 plus negative 5, okay, for your realized losses. Therefore, the net performance of your portfolio for that specific period is negative 10% net losses. So that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.